The Magnificent Seven drove the market in 2023, and one of the companies in that group of stocks is Alphabet, the company that owns Google and Waymo and YouTube, where you're watching this video right now. The stock is up 63% since the start of 2023, but I think there's a lot more room to run higher for Alphabet as a company. I think this is the one no-brainer stock in the Magnificent Seven, and out of the big tech stocks, I think there's still a lot to like with Alphabet today. So that's what I'm going to get into, break down their business and where we should see growth, not only in 2024, but long-term over the next 10 or 20 years. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Go to fool.com/ASYM. It's right there on the screen to get their top 10 stocks to buy right now. Let's look at a few segments and how much money Alphabet is making, because I think this really shows the power of the business. The first image that I have here, I've called the Google results, because this is really the Google business, the traditional business you think of when you think of Alphabet, broken down into a couple things. Google search and other revenue is the first blue column. That's up to $170 billion, believe it or not, over the past 12 months. The second, the orange column, is revenue from YouTube. That's now a $30 billion business. I think YouTube is very well positioned, having user-generated content. It's the go-to place for user-generated content. And now they're moving into more traditional television. So the deal with the NFL, I think there's a lot of optionality to grow that kind of business, and YouTube TV. The third thing is Google network revenue. That's kind of like a catch-all for all of their other businesses that are related to Google. And that's, again, about a $30 billion business, $31.5 billion in revenue over the last 12 months. Add those things together, and this is the way they report it. The Google services operating income, because they don't give operating income from each of those segments specifically, but their operating income for those three segments added together is $90.2 billion over the past year. This is really what drives Alphabet as a company, drives the company's cash flow, drives the valuation of Alphabet overall. And I think it's still extremely sticky. If we think about some of the threats that Alphabet had just a year ago, a lot of people thought that we would stop using search because artificial intelligence was going to be a tool that we use. A couple of things have happened. One, people are still using search. They're not moving to Bing. They're not moving to ChatGPT to do traditional searches. Now, that's maybe a threat long term, but the second thing is that Alphabet has actually brought out a lot of its own artificial intelligence technology. We have seen that they arguably have the second best artificial intelligence, not only models, but chips and ecosystem, so that all can run on their own cloud. I know that NVIDIA has been the hot name in artificial intelligence, but arguably Alphabet has more GPU power with its tensor processor units, and it's making those themselves and actually not only powering their own artificial intelligence efforts, but now doing the same for other companies through Google Cloud. So I think there's a lot more strength there than the market is giving it credit for. That's one of the reasons that the stock is up as much as it was over the past year, but that's a reason to be bullish long term. Now let's go to the other segment that I think is really important long term for Alphabet, and that is the Google Cloud. Now the cloud business has just exploded over the past decade. 2017, $4.1 billion in revenue, and is now $31.2 billion in revenue over the past 12 months. It also recently became profitable. Now, it's not very profitable. You can see just $372 million worth of profit, but it's really turned that corner to profitability. And I think that's a really important indicator for the Google Cloud. Now, the challenge for them in the future is that a lot of these other competitors in the cloud space, this is really all they do. AWS, Microsoft, they're really focused on their cloud businesses. And for Alphabet, for Google, this is kind of a side project for them. So I think that's one of the opportunities, is that as they focus more on this being a really large business, a really big segment for them, they can squeeze out more margin as they get more efficient and start to sell more of these capabilities to customers, especially in things like artificial intelligence. They may be the budget player to build your business on top of over the next couple of years, as a lot of these other companies like Microsoft Azure and the partnership with OpenAI, as NVIDIA and their partnerships really generate high margins because they have leading platforms in not only the cloud, but artificial intelligence. Well, Google is also here, and they're starting to unleash their capabilities on the market. And so I think we will see improved profitability on the cloud side. And there's a lot of opportunity for growth when you're generating $8.4 billion in revenue like they did in the most recent quarter, just 266 million in operating income. So that's a pretty small margin, just a couple of percentage points in margin. They can bump that up to 10, 15%. That's going to be a meaningful impact on the business. So I think that's one reason to be really optimistic for not only revenue growth, but also operating income growth. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The final thing I want to mention is the optionality that Alphabet has with Waymo. Waymo is their autonomous driving unit, and it's really just a technology company. They're not building their own vehicles right now like a lot of their competitors are. Cruise and Zoox would be the two to mention. While I don't love that it's under Alphabet as a company, they're building arguably the best technology in the space. And now they could license that to a company like Uber, like they're doing right now in the Phoenix area. They could license it to auto manufacturers. They could decide to build their own vehicle and launch their own service, or they could just sell the business or merge with a company like Uber. I think there's a lot of optionality in the business. And again, there's not a lot of value there that's being priced in from a stock standpoint. So let's get to that valuation piece, because I think that's also really important with Alphabet. Despite the fact that the stock is up as much as it is over the past year, Alphabet's price to earnings multiple on a trailing basis is just 27. Price to free cash flow is just 24. So that's a pretty reasonable multiples on a trailing basis for a company that's still growing. Now, if we look at a next 12-month basis, that's based on analyst estimates for the next 12 months, the price to earnings multiple goes down to 22, and the price to free cash flow is just 21. So that's a pretty reasonable valuation given the expected increase in earnings and free cash flow. We have also finally started to see Alphabet start to buy back shares. About 1 million shares outstanding have been bought back since the end of 2020, and that's starting to accelerate. It's starting to be meaningful for a company of this size. So what is Alphabet going to do with all of the cash that it's generating? Well, they could pay a dividend, they could buy back shares, or they could reinvest in the business. I don't think there's enough growth in a lot of these business segments for them to spend $100 billion on growth. So one of the logical things to do, and something that a competitor like Apple has done, is just buy back shares. And so I think that's another reason to be bullish on Alphabet. They're just going to steadily do that over time, steadily buy back shares. So reasonable valuation given the growth metrics. And I think this is a much bigger and much stickier business than a lot of investors are giving it credit for. Maybe isn't going to be the growth stock that it was over the past decade, but over the next decade, we're going to get to a more mature phase for Alphabet, generating a ton of cash, buying back stock, investing in some of these new businesses like the cloud and artificial intelligence. And it's just steady as you go. Even YouTube, don't underestimate that as being a massive driver of both revenue growth and income growth as they grow not only the existing YouTube business, but also the TV business. How do they get into TV in a bigger and bigger way, as some of these sports leagues in particular are starting to look at who is going to write us a giant check? YouTube always comes to the top of that list. So they may get in deeper with the NFL, with the NBA, with Major League Baseball. So something to watch for 2024 and beyond. But I'd love to hear what you think about Alphabet today. I know this is one of the big tech stocks, but this is the one Magnificent Seven stock that I still think has a lot of upside and isn't overvalued at today's price. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.